Today, the capital markets are in a benign state. From this point on in 2023, provided that the debt ceiling question in the US is resolved, we believe that the market backdrop is going to be benign and constructive for risky assets. As we are cautiously optimistic on the economic cycle, we don't favor highly cyclical sectors, but we favor those sectors that are well capitalized and with a demonstrated capital efficiency. We also favor the financial sectors, given the high rates on offer by central banks today. In the fixed income markets, we like both credit and government debt, given the high yields on offer in these markets today. Defensive commodities such as gold have a role to play in a diversified portfolio. Finally, there is value in the higher volatility on offer in the equity and FX spaces that can be harvested through structured products. Today, we see three main risks in the economy that could have an impact on capital markets. The first one is the ongoing discussions in the US regarding the debt ceiling. Indeed, if no compromise is reached in the US, this could have an impact on the equity and FX markets, provoked by a default of the US. The second risk that we see is a policy mistake by any of the central banks of the Western world. If one of the central banks hikes their rates too fast or too high for the economy, this could provoke a recession, but also a bit of panic in the asset markets. And the third risk that we see is a confidence crisis in the banking sector. We have seen in March that smaller banks could effectively fail, and if other banks follow this path and investors start to be shaky about the situation, this could have an impact on the economy, but also the asset markets. In this context, we recommend to be defensively positioned in the equity sectors. We believe that there is value in getting exposure to two themes. The first theme, which relates to how industries consume resources, there is ample public and private spending in trying to minimize the use of resources in industrial processes, which will benefit shareholders over the long term. For the second theme, we believe that the aging populations open up new opportunities in a certain number of sectors, including healthcare, asset management, insurance, and other type of sectors such as leisure, and it is a good investment for the next 6 to 12 months. We believe also that there is value in the fixed income markets, in credit and in government bonds, and we also believe that volatility is something that to be harvested through yield-enhancing structures or twin win on selected underlyings such as oil. Please be in touch with your Lynceus contact to explore how to take advantage of the current market conditions.